everybody, welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury, and today I'd like to talk to you about trading pre-market and post-market earnings. So right now it's towards the end of August, and a lot of companies are reporting their second quarter earnings. And what I realized was that every day we're seeing companies, big cap, small cap companies, mid cap, they're coming out with these earnings. And one of the things that I learned a long time ago, and I've actually made this mistake twice, is sort of jumping in front of a moving train. And the reason why I wanted to make this video today was sort of go over some examples of how when we try to trade earnings, so for example, if a company is coming out with their earnings, let's say right when the market closes, and the moment either it's about to be announced or it's announced, we sort of jump in the trade with actually no clear understanding of what direction is the stock going to take. Now, a lot of people think, well, duh, if the earnings are positive and the company is profitable, right, that the company is for sure going to go up and the stock's going to go up. And that's not always the case. So what I wanted to do was give you an example of something that just happened a little bit ago. So VMware, pretty large cap company, came up with their earnings, and they came out with their earnings, you can see right here, and it was actually 0.9. It says right here 0.9, so which is 90 cents essentially earnings per share, and they actually got $1.80. So they actually doubled what they were expecting. And a lot of times we're seeing this trend that companies in COVID are actually doing really well, but then they forecast or they have some announcement that they're withdrawing their forecast for next quarter, or that they're seeing some possible decline in revenue. And so you would think like, yeah, this stock's going to blow up. So it was consolidating before the earnings. As soon as the call came out, look what happened. So this candle here, this one, we're on the 1 minute chart. It goes from a low of 144 all the way to 151, and that's in one single minute. It does an $8 jump on very low volume on 29,000 shares, so it's extremely low volume. And then look what happens the next minute. So if you got involved with this stock and it jumped all the way to 151, and maybe you weren't even paying attention to this, look what happens the next minute. This thing goes down to a high of 148 and a low 146. Then it goes down to a low of 142 and a high of 146, and then look what happens, right? It falls below that purple line we call the VWAP, and it starts to consolidate downward. So here's a stock that came up with solid earnings, popped up, and now it sort of dropped. So imagine, again, you're trying to be this person that jumps in front, and so maybe you're long biased here, and you buy the stock, and before you could really even react to it, because this happened so fast, you're like, yeah, it's 151, it tanks and consolidates. So this is the mistake, and this is why I wanted to make this video, was try not to jump in front of any moving trains when it comes to earnings. Let the big money, the institutional investments, the investors, the other retail traders out there develop that curve for you. Watch it sort of grow and let it see where it wants to go. Where is it resistance? In this case, we saw a pop and then we saw a drop, and now we see a consolidation. And now look, we're dropped all the way to 141.30. So if I took a position here and said, oh, I'm going to go long, and I didn't sell up here, which again, this is a really quick move, look where I would be right now. I would be down. I'd actually be down from the market. This stock closed at 143, right around 143, and it's at 141. So my biggest suggestion when it comes to playing post and pre-market earnings is let the earnings come out. If you're already holding on to the stock, it's a 50-50 gamble you're taking. It could either go up, it could go down. You don't know for sure. So the best thing you can do is at least minimize your position, especially if you're already green. Minimize the position maybe to a quarter size is what we call maybe a lotto share, which is just to kind of see where it goes. But have a risk plan in place so that you don't say goodbye to your profits. Because in this case, like I said, if you would have gotten involved, you would have got there. And we're seeing this time and time again. Now let's look at Ulta. Ulta Beauty came out with their earnings, and look what it actually did, right? So this is the 5 minute chart. Let's look back at the 1 minute chart. So they came out with their earnings at the same time, and their earnings was, again, same thing. Estimate was only about 10 cents, and they actually had 73 cents. But look what happens. In a 1 minute chart, this stock had jumped $10.50 in the minute. And then the next, it jumped another $8, and so and so. So we ended up closing today at $223.95. And right after the market closed at 1 o'clock Pacific Standard Time, within about 5 or 6 minutes, we were all the way up at 265. So imagine, again, let's say you were a short bias trader with ultimately you're like, yeah, people aren't probably going to be spending money, and you shorted this position going into earnings. You would find yourself $40, $50, right? $40, $50 out of the money. So you don't want to put yourself in a situation where you're jumping in front of a train. And again, I made this mistake. I made it with AMD, which if you look back about 3 weeks ago when they came out with their earnings, was super solid, especially with Intel. And I said, you know what? Let me get involved with just a small, even a small share. And because it jumped up so fast, you quickly see that even a small size, if you have a, for example, $40 move, that could add up quickly. Okay, so with all that said, what we want to do is we want to let the smart money design and tell us where this chart wants to go. And then once it starts to really develop, and you can kind of see where the resistance levels are, where the pivot is, you can see it extended all the way to 270. And then it kind of came back and sold off down, right? And we can use our RSI indicate, we can look at our volume. There's all these different indicators, but we can't use those indicators if we're jumping in front of the train, okay? So play it smart and happy trading, guys, and I'll see you guys on the next video. Thank you. Bye-bye.